session number 4, right? Amy,
Yes.
this is session number 4.
Say that again.
This is session 4. Session 4.
Yes.
We have the
Session 4. Yes.
Did you attend the boot camp? It was just an hour ago.
No, I just got home about 10 minutes ago.
Oh. So today we're going to talk about the peak, right?
Okay.
We ended on the indicators and the charts, the candlestick patterns. So today we're going to talk about the peaks. So peak formation. So how do you know that the dealer is forming a peak here? How do you identify a peak? This is today's topic. So first of all, do you want to tell me something? I can hear you.
So it'd be 3 drives up, and then the 3 ADR is met. I think the last time we talked about the shark fin, I looked at some charts yesterday with Dana, and I forgot to look at the TDI, but I am recognizing the pattern of the M and the W and the V's and the A's and the 3 drives and so forth, and the ADRs.
That's good. That's good. That's progress.
And then we did talk a little bit about the EMAs yesterday when we looked through things.
Okay. So let's talk about the peak formation here.
Okay.
So the first basic thing that you need to consider on a peak is that you should know that the cycle is complete. You
Okay.
should see the 3 levels drop or rise, the 3 times ADR is met. So the conferences for a completion of a cycle should be there. The EMAs are fan out, and then they're coming close to one another. And on the hour 4 time frame, the TDI is showing a sharp finger.
Okay.
Now, I've categorized the peaks into 3 types. Now the consolidation, the EMA, the news peak. In the news peak, we have the first leg and the second leg. So let's start with the consolidation peak. Let's start with the consolidation peak. Here is a consolidation peak. Now, on the consolidation peak, you should know that the peak happens when there is no news release around. So when there is no fundamentals around, that peak is to be formed. So we know that the main responsibility of a dealer is to provide liquidity for the market. He's the market maker. So in order to make the market, he needs to trap a certain amount of liquidity on a certain level and then swing the market away from that trap zone. Now, when I talk of these peaks, you'll see that the dealer has already trapped the liquidity, and then he will swing the market away. Like the consolidation peak here, the dealer has applied the brakes today.
Okay.
This one was the first leg on the hour 1 time. This one is the hour 1 time. So the dealer would shop around this area for more than 2 days, and then he will swing the market away.
Okay.
So this one was the first, the second, the third day. And then on the fourth, early dealer swing the market away. So your main responsibility here, you need to have patience to wait for the second leg. Patience is very important. So you should wait for the second leg M or the second leg W. You should wait for this during consolidation peak.
Okay.
This is another example of a consolidation peak. So the dealer had applied this break. So if he extends for the second leg, you would find him coming back for a third tap here, like this one,
Okay.
as a stop hand. So this one was the first leg, this was the second, this one was the third, and then you swing the market away. So there's a certain level here, a certain low, like you can draw a certain line here, a horizontal straight line, in which the dealer hasn't broken the line. So in the consolidation peak, another thing that you can notice is the head and shoulder pattern might be formed. Like the dealer would come for this one was where you apply the brakes, he would extend, and then it would come for a stop and flow here. So this one will be the left shoulder, the right shoulder, and here is the head.
Oh, okay.
So this one is the head and shoulder pattern. This one is called the inverted head and shoulder. And on top here we have like this. This one will be the head and shoulder. So you should wait for the second leg M, the second leg W in the consolidation peak. So why does the dealer stay around this area for 2+ days? In order for him to trap enough liquidity to swing the market away. So on this level is where the dealer would buy against the retail traders or would sell against the retail traders in order to accumulate enough position for him to swing the market away. So
Okay.
if a retail trader is, if the stop loss of a retail trader is hit for the first day, he would stay out of the market for a day and then come back the next day. So the market maker would wait for him to come back to the fray and then give the same entry confirmation and then swing the market away, just where the dealer would stay for 2+ days. Okay?
Okay.
This is the consolidation peak on the hour 1 time frame. So you wait for the second leg. You see this consolidation peak.
Yes.
A very good one. This one is also a consolidation peak. It has a, no, this one is the news peak. Second leg news peak. So let's talk of a news peak. Now suppose the dealer is on the third level. Like the dealer is around, where can I find that? Again. So let's talk of the news peak here.
Okay.
News looking for a first leg news peak. Or this is second leg news peak here. So this one, the markings that I show right now for the 15 minutes time frame, the one you see right now.
Yes.
So this one is an example of a news peak. Okay.
Okay.
So dealer was in level 2 going level 3. And there was a news release. There was a fundamental at that time. So dealer used the news to complete the third level. And then because this was a fast move and it was an uptrend, so retail traders are convinced that the dealer is still buying because see they take the fundamentals, and if the fundamental is like positive, so the dollar is positive, Euro USD would, if the dollar is positive, Euro USD would, if dollar goes up, Euro USD will go down. If the dollar is positive, that means Euro USD will go short, and they'll take that, it will go short for a long time. But the dealer would simply complete the third level. So the dealer would simply complete the third level, and then he would switch the market away. He would switch the trading zone like this one.
Okay.
So usually the dealer would form an outside structure like this. Like this is a half a Batman. You see it?
Oh, yes, I do. Okay.
So during news peak, and if the news is on the first leg of the peak, like this one is the first leg peak without the second leg. So if there is news and the dealer is on the first leg of the peak, you should not expect for the second leg. So you may enter aggressively at this level. You should wait for this mild stop at here and enter. Okay?
Okay.
This one is the safe pattern here. So this is an example of a news peak first leg, and it usually happens on Euro USD.
When you enter, is there a standard number of pips you're trying to gain, or you don't take the trade? Do you know what I mean?
See, when I enter a trade,
Yeah, when you get ready to enter, do you have in your mind, I want to make 50 pips or X amount of pips, and if I don't think that it's going to reach that target, then I just won't even enter the trade?
we will talk about that.
Okay.
Right now it's not a good time to talk about that, because this is simply a peak. We have not talked of the peak entries and all that. So we'll talk about that. Now this one is the second leg news peak. This is the 15 minutes time frame. So when you go to the hour one, you find a big W. Find a big W, right?
Okay.
Now, you find the dealer is around this area. You know that the first leg here, the market cycle is completed. You expect a reversal. So you should expect for a dealer to pin and shift the trading zone. And sometimes the dealer might not pin. If the dealer was around this area, was around the blue tracer here, he would simply shift the trading zone away. So this is where you enter aggressively as a buy order. I usually don't put stop loss around this area because it might take me out, but I know the direction is wrong. For example, USD card. Where's USD card? You see this? This was a news peak.
Okay.
So it simply took people out who went long, and many people were on long position. And I think this was the candle for the news. So this was
Okay.
the candle for the news. He came back again, as many people were already on a long trade here. So he came back again down. So today they opened the market with the second leg here. See the gap here?
Oh, yes.
So he opened the market with the second leg and boom, he went off. So once the dealer has enough liquidity, he will not wait. He will simply make the market move in the direction where he hasn't trapped the liquidity. So this is an example.
Okay.
He simply didn't move the same day, but he moved. So this is where you enter long and you hold. You know that the dealer will go up. You know the cycle is complete, all that, so the dealer will go up. So this one is an example of a news peak. You see it, first leg news peak. So the dealer induced people to go long and then boom, shifted the trading zone. So if it's the first leg, the dealer would first go in the same direction as here he went long and then boom, he switched the market away. So some people may enter here aggressively. I can enter here aggressively. I can enter a short trade, although he would go long for a moment because I know maybe 3 times ADR is near this area, but I know he would come back.
Okay.
Yeah. So that's the second type of a peak. So we have the third type, the EMA peak. The EMA peak, we have Pound USD has the EMA peak here. The EMA peak is the peak formed on the hour 1 time frame around 800 EMA, around the blue band.
Okay.
So you see the dealer is on the blueberry and the cycle is complete. So you would offer the first leg, you wait for the second leg. Okay? See the second leg here is simply extended and there was a railroad track here.
Okay.
So you wait for the second leg and then you enter. And this one is on the hour 1 time frame. So the second leg on the hour 1 time frame, this one was a stop and high, so the dealer had enough liquidity here for him to swing the market away. There is where you enter without fear.
So when you enter, are you waiting for a candle to close before or after the middle of the peak, the M, or do you enter before that? Show me again on this one right here where you would enter.
Our peak entries, we'll learn about our peak entries. We usually enter on the 15 minutes time frame.
Okay.
Not on the hour 1 time frame. So we have 2 types of peak entries. We'll talk about that. Let's just stick on the type of peaks here, how we identify the peaks. Okay.
Okay.
This was not an example of an EMA peak. You see it. So the dealer had applied the brakes here, went to the EMA for a stop hunt, and then this one was another stop hunt here, and then sweep the market away.
Okay.
Okay.
Yes.
So these types of picks are the picks that I want you to look when you are in the market. You should find them. Any other type of a pick is not your pick to enter, because
Okay.
you'll simply be gambling there. And I've told you these picks with all the confirmation that the dealer has enough liquidity for him to swing the market away. So for example, this one is the consolidation pick. You see this. This was around a week here. Like the first day, the second, the third, no, 4 days. And this was an extended stop hunt. So it took out all the people who were going long here and then sweep the market away. And this one was another consolidation peak, but today opened up with gap. All the years opened up with gap today. But this one was the move. So those are the 3 types of peaks. So your homework today is to go and mark these peaks. Okay.
Okay.
Like the way I marked my peaks here. I know you can't write all these words, but you can simply write like this. This is a consolidation peak. This is a head and shoulder. There's a reset here, but this is a W. You can write them, right? Like
Okay.
see a shift candle here is, so you know that there was a news release here. All that.
Okay.
So the pairs that I need you to mark is KJPY, from January on the hour 1 time frame. Okay.
Okay.
And there's this pair that I marked. This was USD card, also USD card from January, and USD ZAR. So the 3 pairs, you would mark them, and then once you send me the homework, I would send you my markings.
Okay.
And also I'll look into your homework for credit. Now, a peak reset. Let's talk about peak reset now. How can you anticipate a peak reset a miles away? I mean, miles away. How can you anticipate for a peak reset miles away?
Hang on 1 second.
Okay.
Because I said no. When I get off the phone, then yes. No. I know it will take a little bit, but you've got your juice out there. You can have an apple. You can have any of the fruit that's in there, carrots, or your goldfish. Okay, go, don't bother me. All right, sorry about that. Go ahead.
Okay. Now the peak reset. A peak is formed on the daily chart. A good M, a good W. Okay.
Okay.
A good M, a good W on the daily chart. There's a 5 after 10 crossover. Like, let's take a look on the chart. This is the daily chart for USD Swiss franc. You see this peak? This is a very good peak.
Yes.
You see an M here, right?
Yes.
Also, Euro New Zealand has a good peak on the daily. You see this? There's an M on the daily.
Yes.
Yes, this was franc, a very good peak here. Now, there's a very good peak on the daily chart. Like the dealer has spent many days forming this peak. So you should expect a reset from there. You should expect 3 levels on the daily time frame.
Okay.
3 levels on the daily time frames means 3 cycles on the hour 1 time frame. Like this one was the first cycle. It took 3 to 5 days. This one was the second cycle. This one was the third cycle. And in each cycle, there's the 3 times ADR, 3 times ADR, 3 times ADR. Now,
Okay.
you anticipate for a reset once the dealer has completed the cycle, the first cycle. This pullback here would go to 13 EMA. So the first pullback to 13 EMA, there is your peak reset. So this here is your peak reset.
Okay.
This is your new peak going down. This one. So
Okay.
if you go long around this area, because this will be another peak on the hour 1 time frame, a peak reversal, you should expect a reset here. Okay.
Okay.
So you can anticipate for a reset miles away. And since here he has broken this, there's a price line grid here, and there was the 50 EMA. So he simply came back for a retest here on the price line grid and the 50 EMA, and then he completed the cycle. But because this is a good peak, then you should expect a third level. So you can take this long trade, and this long trade has pips. It can even complete 2.5 ADR or 2 ADR on the second level, going the third level on the daily charts. So you can take this long trade, and then you know this is a peak reset. And here the dealer came at around the 50 EMA.
Okay.
Around 50 EMA, and there's a price line grid here. See a quarter price.
Yes.
So this one was another peak reset, and then boom, the cycle is complete on the daily time frame. Now we should expect a big peak here. So I should expect him to come for a W here for it to be a good peak, or even a pullback like here. We have this is type of head and shoulder.
Okay.
You see this? There's the first level, the second, the third.
Okay.
So the 3 levels on the daily chart indicate 2 peak resets. Okay.
Okay.
So once you see a good peak, a very good peak on the hour 1 time frame, like the peak is big, it took many days, you should go on the daily time frame and you look on the peak, you see that the peak is very good there. And now you should anticipate for a reset there. So that's how you anticipate for a peak reset. This one is a peak reset here. Like there was a peak here, it took 4 days to form this peak. So the dealer completed the cycle, formed the peak here, moved about 1.5 ADR, pinned the 13 EMA. So this is a peak reset. So I told you earlier that peak resets usually occur on chart landmarks. That is the 800 EMA on the 15 minutes, the blueberry.
Yes.
200 on the hour 1. The same 200, right?
Yes.
And it's the 50 on the hour 4. And here on the daily is the 13 EMA. That's why we anticipate for a peak reset on the daily time frame. I hope I'm clear there.
Yes.
So this one was the hour 1 time frame here. So variation to the cycle. So there are certain variations that happen on the cycle, like you'll see a big rise or a big fall, or there might be an extension on the stop band, that's a very deep stop band, extended stop band. So you should be aware that the cycle varies. It's not as simple as it looks like.
Yeah, no kidding.
Yes. So there's certain variations. So the variations I used as extended stop bands, especially when the stop band is in higher time frame. Like gold, what is gold doing right now? Commodities, gold. So this one is gold here. You see the daily time frame. So from this peak here, so the dealer moved the first level, the second, the third. So he completed here, but this was an extended stop band, and then he moved 1, 2, 3 levels, formed the peak on the 800 EMA.
Okay.
So I usually shift the knowledge that I have on the hour one time frame to the daily chart. Like this one is a consolidation peak. This is simply a peak here where there's an extension here, like there's a deep stop band. This one is the EMA peak. I usually look at the daily time frame like that, so that I would swing. So if you enter trade here, I would swing.
Okay.
So this now is the variation here. See this big rise here. This is the variation that I was talking about. So when you look on the hour one time frame around this area, I have the markings here. You look on the hour one time. This was the hour one time frame. There was a first peak here. It came back for the second leg here. You see it?
Yes.
So, and then he went to, this was a W, V, V, M, then M, A, A, W. You see the cycle is straightforward. Like the dealer is swinging along a certain zone here. There's a certain zone that the dealer doesn't break. So if you see the cycle is like this, you should know that there's a peak that is formed on the higher time frame. Should be quick at knowing that there's a peak that is formed on the higher time frame, because the market can't be straight like this.
Okay.
So the variation here happened because there was a peak here. It was forming a peak here. You see, this was the first hit, the second hit. I expected him to move away from after this W here, but he came back for a third hit.
Okay.
Then he moved away. This was the first. He will come until here and will go for the third level. So this one is the variation now. So if the dealer has stayed, this one is the consolidation on the daily time frame. So if you see this consolidation on the daily time frame, expect a big rise or a big fall. Okay.
Okay.
This one. So another thing that the dealer the variation may be used by the dealer to increase or decrease their position size. That's called dealer offloading. I have an example here on the markings. USD ZAR. See this. This is called dealers offloading. So this was a peak here. I remember I was in this trade. I was in this trade, and the trade was going very well. Then the dealer offered this spike here. See,
Okay.
he even took me out of the position. So this one is called the dealers offloading. We
Okay.
offered this spike offloaded people out of their positions, and then boom, we have our cycle there. So sometimes this may happen on the chart. I find the dealer is taking you out of the position. So you should know that that's a simple variation and it happens. You should not be shocked. Okay. Sometimes the dealer may use the variation to induce traders to commit or to take trades at extreme levels from fear of greed. So you see the price is extending on certain levels. See there's a certain extension, like see the cycle is complete, but the dealer is extending the price because he needs to induce traders to commit there. Also during the start of a season or the end of a season, the variations are there so that they could stick people for a season or even a year. Okay?
Okay.
So the cycle may look like this. I have a W, V, V, this was a V here. Then it came here for a reset, W, V, V. This one was like a head and shoulder. So the cycle is like that. Okay, you should also always remember that after a big rise or after a big drop on the market must chop or it may correct. But what do I mean by correction? Correction is what happened to Euro yen here. You see this, there was a big rise here, like 2 times ADR straight off. You should expect a deep stop punch like this. See, this stop punch here is almost 1 times ADR.
Okay.
Yes. So you should not take this as a reversal. Like the dealer has already moved 1 times ADR, that means it's a reversal. No. This is simply a deep stop punch because of the big rise he had. Okay?
Okay.
So after big rise, you should expect the market to chop. The same here. There was a big rise here. I expect the market to correct. Big rise, I expect the market to correct or to chop around. That is why we have the level of consolidation at each level. Because there is a rise there, there's a consolidation. Because the market needs more guys to enter, it needs more liquidity for the market maker to swing the market away. Okay?
Okay.
Now let's talk of the trades now. We have the peak trades and we have the away from the peak trades. Let's start with the peak trades. Now we have 3 types of peaks. We have the EMA, the news peak, and the consolidation peak.
Yes.
Now for a consolidation peak, the dealer has applied the brakes here. You should wait for the dealer to offer the second leg around the blue tracer. So these are the entries on the blue tracer.
Okay.
For the peak entry. So you should not enter here once the dealer has applied the first break. No, you wait for him to give you a second leg like this. So this second leg on the hour 1 time frame, when you come back to the 15 minutes, you find the dealer forming a W. Here, there's a W here. So your entry was there.
Okay.
So on the second leg, you find the dealer forming a W. Okay?
Okay.
See this? There's a blue tracer here. So that means the dealer had applied the brakes somewhere around here. And here there was the M. So you can see there are 3 swipes here.
Yes.
First, this one was the second, the third swipe. A very beautiful M with the pins, candle, all that. Boom, there is your entry. And he has come back for a retest of the quarter price. Another entry. So you should wait for the dealer to offer the second leg on the hour 1 time frame. So when you come back to the 15 minutes, you find him forming an M or a W around the blue tracer. Okay?
Okay.
So I usually say that we hunt the peaks. So suppose the dealer has applied the brakes, you need to hunt the peak because he may offer that around Asian, around like any time of his choosing. So let's take a look on the markings I have. This one was the entry peak here around gap time. So this one was a news peak where he formed this was the half a Batman, the outside structure. So your entry is here. You see this cycle, it happened from here. So this was the first level, this one was the second and the third. See, this is the blue tracer. It came back to the blue tracer again. She applied the brakes here, it came to the blue tracer again.
Turn my phone off. I'm sorry, my phone's ringing and the dog's going crazy. Bring it here, Sophia. Thank you. Okay, go ahead.
Okay, this is where he applied the brakes. He came back to the blue tracer the next day, formed a very beautiful pattern there. There is your entry. So you should wait for the second leg of the hour one time frame. It will be your W. See here, he formed the entry. This was around Asian, at the open of Asian. I mean, at the open of London. I mean, the close of Asian, because London opens here. There was an M here, but the entry was confirmed during gap time here. So this was a peak entry. This one was another peak entry. So you should wait for the second leg. So this one was the news peak. And this was a peak and this was a peak reset. So from here to here, there was around 1.5 ADR. So the dealer had applied the brakes here. He used the news to induce people to go long, like you can see here. And even all those people went short around this area because this is a pattern on the blue tracer. He took them out and then he came back again. There is your entry after the news. So during peak formation, you need to hunt for the peaks. There is where you enter aggressively to hunt for the peaks. This was a peak reset and it happened after the news.
Okay.
Like there was a pin here. So you see a pin here and the news is continuing, then you can enter there. So you can see here, he entered and he went for the second level.
Okay.
So another entry on the peak, we have the ID50. We have the entry that is called the ID50. Now, what's the ID50? What's an ID50? An ID50 is like this here. So this one is the peak. Okay.
Okay.
There is the 13 and 50 MA crossover.
Okay, I see it.
You see it, yeah? This is the
Yes.
15 minutes time frame. So
Okay.
after the crossover, this is the first pullback to the 50 MA, right? And here I came to pin the blue tracer again. This was a high test pattern again. So the first
Okay.
pullback to the 50 MA, this is the ID50. So this is another entry that the dealer would offer on the peak.
Okay.
So this one is the safest entry on the peak formations. Okay.
Okay.
Entering here is aggressive, and you need to hunt for the peak. But this one it usually happens. And if you're trading a big lot size, you should wait for an ID50. And usually ID50 gives you, when you enter an ID50, you get zero drawdown. Usually you get zero drawdown because price would move away quickly. So our entries, you see this candle, this red candle, this candle,
Yes.
it's closed, below the 13 and the 5 EMA. So there is your entry. Another confirmation about the ID50 is the TDI here. So you'll see that the black line is crossing the red line. The RSI, price line, and signal line are crossing. You should know that the ID50 is happening there. That's another confirmation of an ID50. Okay?
Okay. Okay.
And that's another entry for your peak. The ID50. And ID50s are usually very good. Like this one is the peak. Now, the ID50 on our one time frame is simply the first pullback on the 13 EMA. Like this one is the peak. Dealer has moved. 5 and 13 have crossed. If 5 and 13 is crossing on the hour one time frame, then 13 and 50 is crossing on the 15 minutes time frame. When you do the EMA conversion. So the first pullback on the 13 EMA is the first pullback on the 50 EMA on the 15 minutes time frame. This is a good example. There's a peak, 5 and 13 have crossed. First pullback, this pin to the 13 EMA. This one is the 15 minutes time frame of this chart. So here we have the 13 and 50 crossover. This is the same as the 5 and 13 on the hour one. And the first pullback to the 50 MA, this one, the ID50. There is your entry.
Okay.
Okay?
Yes.
So ID50 is a solid gold if there is a 50 MA near the 13 MA. And the pullback is usually, the pullback pins both EMAs. On the hour one time frame, you find, like, suppose here price moved around this area and it came back here, and you find the 13 and the 50 are here, and it's pinned both the 13 and 50. That's a solid gold ID50. Okay?
Okay.
So this happens every day. So you just need to train your eyes to see them. And how do you train your eyes to see them? You need to mark up your charts. You see, I have markings of this year. I also have markings of last year. I usually mark charts from time to time in order to improve myself. So chart markups are usually good. So you have your peak entry. How do you know that the peak is locked and I can hold trade for 2 more levels? We have the level 1 lock, which is the 13 and 50 MA crossover on the hour one time frame. And if ADR times 1 is met, if the dealer has met ADR times 1 and there is the 13 and 50 MA crossover on the hour one time frame, we know that the peak is locked. So this 50 and 200 EMA crossover is on the 15 minutes time frame, which I've written here. It's the same as the 13 and 50 EMA crossover on the hour one time frame.
Okay, say that again. The 5200 on the 15 minute.
It's the same as the 13 and 50 EMA on the. Let's take a look on the chart.
Okay.
You see this, the 13 and 50 MA. Let's mark it here. Surround the blue tracer here. You see it. This one is the level 1 lock. I told you this on the EMAs. This indicates a level 1 lock. So when you go back to 15 minutes, you find the 50 and 200 have crossed off. So this one, when you see this one and you see that ADR times 1 is met, you know that the peak is now locked.
Okay, gotcha.
Okay. So let's continue with the away from the peak trades. We have 3 types of trades here. We have the safety, the trade away, and the EMA trades. Let's start with the safety trade. The safety trade. The safety trade is called a safety trade because it is safe to take it.
Okay.
It is safe because the dealer here would offer a good stop hunt and would offer a visible pattern, a visible stop hunt and a visible pattern to trade away from the peak. Like if the peak is down here, this is our one time frame. If the peak is down here, they would move, and usually ADR times 1 is already met and the 13 and 50 crossover is there. So you would move and then you see a very visible stop hunt like this one.
Okay.
Stop and low, and then you would offer a pattern here on the 15 minutes. This is the 15 minutes. So this one is the Asian range. It came down here to all the way to the stop hunt box. And usually safety trade occurs around 200 EMA on the 15 minutes time frame. You should note that. Usually it occurs around 200 EMA.
Okay.
So the dealer came down here. He offered a pattern, a W here, and also the W was on the TDI. So this is the stop and low, and then he offered a pattern. Your entry confirmation is there, you enter. This is the safety trade. This is the kind of trade that you can risk all your account. It's very safe to trade this trade, safety trade. Okay?
Okay.
So how can you anticipate for a safety trade before it happens? So you see your peak, you go to the hour 4 time frame. This is the peak here. On hour 1, you find this peak is a very good peak. And the dealer has moved away from the peak. There is the 5 and 13 crossover. The 5 and 13 crossover on the hour 4 time frame would be the 50 and 200 crossover on the 200. On the 15 minutes time frame.
Okay.
So this one is the 5 and 13 cross here. So price moved away, and there's a pullback here to 13 EMA. So you can see the work of 13 EMAs on the hour 4, the hour 1, on the daily. So the pullback here of the 13 EMA is the safety trade. So before it happens, you may anticipate for a stop and high, then drop, and you know that it will go until it reaches 13 EMA. So this one is how it looks like on the 15 minutes time frame.
Okay.
Like it comes around the 200 EMA here. Because of this price line grid, it simply tested this and moved away. But it usually comes around the 200 EMA. We had the safety trade last week on the pound card. This one was a safety trade. It had a lotus pattern here. See, some of my guys take these kind of trades. See, when they see the dealer offering this lotus pattern, you see this. This was the lotus pattern. They wait for this entry confirmation. They enter. Their target is 200 EMA. They get out. They wait for the pattern. They go short.
Okay.
Yeah, so this one was a safety trade, came again for another safety trade. So they usually happen. They usually happen. This was just last week. So we have the straightaway trade. Straightaway trade usually occurs out of level 1 consolidation. You find there is a very mild stop and or no stop and at all, and there's a tight Asian range on your 15 minutes time frame.
Okay.
This one, very tight Asian range, and then the dealer simply moved away. So these are the kind of trades that I do not take, and I don't advise you to take the trades. The entry is the same. The dealer has closed the candle below the 5 and 13 and below the Asian low.
Yes.
So this one will be your entry. This one was a straightaway, but then he came back for a pullback to the 50. So he gave us what we call a 50-50 bounce trade.
Okay.
This one was also a straightaway. So these are the types of trades that I do not advise you to take. So let's talk of the EMA trades. EMA trades, we have a 50-50 bounce trade. This one is the type 3 random pattern. It usually happens as a type 3 random pattern. So the pattern forms around the 50 EMA. You will see a pin or even a pattern on this 50 EMA. This is a pin. And
Okay.
it's around the Asian midline. You wait for your entry confirmation. Your entry is here, not this one. This one is an early entry. So your entry is here, and it is around gap time here, so it's a good entry. And usually 50-50 bounce gives you 0 drawdown. They happen early as possible, as you can see here, very early.
Okay.
This one on another 50-50 bounce. See this is the evening star pattern. A V here on the 50 EMA.
Okay.
So there is your entry. Here we have this was the railroad track. See this candle is engulfed to the 4 candles here. So your entry was there. It was a 50-50 bounce trade. We also have a blueberry trade. Blueberry trade occurs around the blueberry. Like we have a peak high. You should understand that all these trades are the trades we take away from the peak. Like if the peak is high, we take short trades. If the peak is low, we take long trades.
Okay.
So this one is the peak high. So the dealer has broken the blue tracer. See,
Yes.
the blueberry. The dealer has broken the blueberry. It comes back high, breaks again the blueberry high, forms a pattern here high. So if you zoom this chart, you'll find an M pattern here.
Okay.
This is the blueberry trade. So you wait for the dealer to break the blueberry, come back and form a pattern here for you to take a trade. And sometimes it also offers a retest to the blueberry, like this one. So this is where you enter again. Okay?
Okay.
So these are the types of trades that are very powerful. The blueberry trade is a very powerful type of trade. A retest to the blueberry or a break and then it comes back from a pattern, very good. So you see this. So there's also there's a magic here when the EMAs are closed. You see here there's the 5, the 13, the 250 EMA. When the EMAs are close to each other like that, and you know that the peak is high, EMAs are close to each other, and it forms a pattern around this area up here. So it's trading here. So you enter there and price will run away effectively. See, there is magic when the EMAs are close to each other. You should exclude the 800 there. So EMA trades are effective when the 5, 13, 50, and 200 are close to each other on the 15 minutes time frame. So price will run away effectively. So I have an example here. Also have an example here. You have formed a pattern and the EMAs are close to each other. See, price ran away effectively. We have another example here. There's a W here. This is a very beautiful W. And the EMAs are close to one another. Price ran away.
Yes.
This was the pattern where I took a trade here. See, this was a blueberry trade, and also it was a trade where the EMAs are close to one another. So dealer broke the blueberry, came back here, formed an EMA. So on this pin I entered. I didn't wait for the entry confirmation, but you should enter here. You should wait for entry confirmation. So he came back again here. This was a retest here. See this pin here? There was a retest here, and he pinned the 13 and the 50. And he closed below the blueberry and the blue tracer. So I entered again. There is another trade here. So there are two trades here. So when you sit with your chart there, you should go back and mark your entries. You enter, you open your 15 minutes time frame and mark your entries. Mark from January, maybe like I would enter here, I would enter here, I would enter here. So if you see them on hindsight, then you can see them when they're happening. This was an ideal market maker trend. This was for 13th to 14 June, just last 2 weeks. It happened on Euro USD. This was a peak entry here. There was the ID50. There was no safety. So this one was a blueberry trade and also a safety trade because it came to 200 EMA. You see. So I usually update the book by putting research charts so that if I teach someone, you should see that this happens every day.
Okay.
So you simply need to train yourself to capture these trades, okay?
Okay.
So for today, I think we should end here because we have did a lot. So you have your homework, like to mark your peaks and your peak resets. And if you send them to me, and also you can mark your entries on Euro USD. Okay, because I've marked on Euro USD. So you can mark your yes.
Do you want the peak types? Do you want me to do that? Did you say on the US dollar CAD from January?
Yes, you should do that. After you send them, then you come to mark entries on Euro USD.
Okay.
So you have like 3 homeworks, I don't know, 2 homeworks there.
Okay. All right, sounds good.
Okay, thank you for today. Shall meet tomorrow.
Thank you very much. All righty. Bye.
Bye.